Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Alissa, Corcoran, Director of Research at Kopernick Global Investors. Kopernick's investment discipline seeks to identify potential investments that trade at significant discounts to their risk-adjusted intrinsic values. Alissa, welcome to Trade Talks. Sounds like we're going to talk deep value this afternoon. Where are you seeing opportunities in this environment?
Thank you, Jill. It's great to be here. We are seeing a lot of value in the unloved areas of the market, particularly emerging markets, small cap companies, and materials and energy. So as an example, materials and energy make up 5% of the index today. This is down from 35% in the 80s. So in our global all cap fund, they're actually significant parts of our portfolio. Another top holding is Korea Telecom. It's Korea's Verizon. It has strong technology. It has a good balance sheet. And you're paying for this great company for half of book value, 10 times earnings on depressed earnings. Importantly, Verizon's earnings are close to 15%. KT's earnings are 3%. So if these earnings normalize to an area where telecom should, what a normal telecom company should trade at, we think this company is going up 8 times. Now, it also has a 4% dividend yield, so if we never get these normalized earnings, we're still collecting 4%, which is a pretty compelling investment opportunity in a zero interest rate environment.
How do you identify and assess the global names in a COVID-19 world when you're not as able to travel as much?
Thankfully, travel is only one part of our process. We have analysts who have been with us for many years and have been in other firms for many decades. So we're long-term investors. Things don't change that quickly. In the meantime, we've been taking advantage of Zoom calls. For example, we just got off the phone, a Zoom call video with Kazatomprom, the world's largest uranium company, another position in our all cap fund. We run screens, we read investment periodicals, and importantly, we're trying to find those companies that are not found on mainstream TV, things that are overlooked, and that's where we find the best values.
You had mentioned KT versus Verizon. Are there sectors that you like more versus expensive industry peers? What sectors appear to be the most attractive?
As I mentioned, energy and materials, particularly gold mining, make up a large percentage of our portfolio. We're finding other areas in farming. For example, we own a Ukrainian farming company that you can buy for $400 per acre of topsoil compared to $10,000 per acre in the US. And so the best opportunities are really in mining, I think, and some of these real assets. One of our top mining companies is Centerra Gold. It's a Canadian mining company. It has decades worth of gold. They're making a lot of free cash flow today. It has a 9.5% free cash flow yield. And interestingly enough, it has the same free cash flow as it did in 2011, yet the stock price is half of where it was in 2011. And they've built their reserves, and they've actually used this bear market in gold to collect assets.
Yeah, when you guys say all cap, you're not kidding, buying Ukrainian farmland. I mean, that's fascinating. So to wrap up here, let's talk about commodities. You mentioned gold miners and some of the gold stocks. Are there any underlying commodities that you think could outperform?
With all commodities, the way that we look at it is we say, what should the long-term commodity price be? And we will invest when the spot price is well below that long-run incentive price. The opportunities we see today are in uranium. We think the spot price should be, or the long-term price should be anywhere from 60 to 90. Today it's 30. Natural gas, we think there's a lot of upside there. Gold, platinum, and silver are some of our favorites. A natural gas holding that we have, one of the few U.S. holdings that we actually have is Range Resources. It has a huge natural gas reserves, and it will be able to produce for decades. Natural gas prices were high, and they're down now to $2.50. This used to be a $93 stock.
Yeah.
And now we were buying more of it in March when it was $2, a share. So, and now it's bounced, it's closer to $7, but we still think that, the stock could go up significantly from here.
All right, Alissa, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.